In this video, we're looking at AT&T. We will look at some of their numbers. We will look at their dividend and their valuation. Today we have rising interest rates, high inflation of more than 8%, and falling stock prices. So the question is, where can we find a safe harbor? So the goal here is not to make money, but not to lose money. So today we're looking at 3 reasons why I believe AT&T may be a good investment in the current environment. So let's get started. First of all, if you want to get updates about AT&T or other investment ideas, you can subscribe to the channel by pressing the subscribe button under the video. You will not miss a single new video. Okay, if we look at the S&P 500 from year to date, we can see that it is down almost 20%. So we are almost in the bear territory. But the research shows that during the recession, dividend stocks tend to do much better. If we look at some of the tobacco stocks, for example, Philip Morris, which is up around 8%, Altria, which is down around 9%, but again, this is much better than minus 20 for the S&P 500. So tobacco stocks tend to do much better during the recession, and I believe we can say the same about the communication services sector stocks. So if we look at the Verizon, it is down around 2%. If we look at the AT&T, it is up around 6%. So while the S&P 500 was down close to 20%, AT&T was up 6%. So right now we will look at 3 reasons why I believe AT&T may do much better if we have a recession coming. Okay, the first reason is predictability. If we look at the S&P 500, we can see that it has a lot of growth stocks. For example, recently I have made a video on Google. Analysts are projecting for the growth rate to be around 14%. If the growth lower, it will have huge impact on the valuation of Google. I'm not saying that I'm bearish on Google, but we need to consider the risks of investing in high growth companies. On the other hand, for AT&T, the growth rate is projected to be close to 2%. So the top line number, the revenue growth rate, is projected to grow only 2%. It has also very predictable free cash flow, and people will always use their phones. They will always need internet on their phones. So yes, AT&T has a much slower growth rate. I believe Peter Lynch would call it a stalwart, but they also have a predictable growth rate and predictable free cash flow, which is very valuable in the current environment. Okay, the second reason is the dividend, and I believe a lot of investors are for the dividend. AT&T has a high dividend yield of 5.3%, so if we divide their current price by the dividend, we get the 5.3%. They also have a relatively low payout ratio of close to 50%, so the dividend seems to be stable. So if the market goes lower, it is very likely that we'll still get our dividend. And the third reason is valuation. It is very important that we do not overpay for the stock. So we will use enterprise value to EBITDA as a valuation metric. EBITDA stands for earnings before interest and tax depreciation amortization. So we will compare the valuation of AT&T and Verizon. First, we will need the enterprise value. Enterprise value is market cap plus debt minus cash. So we take the cash and cash equivalents and long-term debt from the recent balance sheet of AT&T and Verizon, and we take the current market cap at the moment of writing the video. Analysts are projecting for the EBITDA in 2023 to be 43.7 billion for AT&T and to be 50.8 billion for Verizon. As a result, we get the enterprise value to EBITDA for AT&T of 6.68. For Verizon, we get 6.93. So we get a relatively low EV to EBITDA multiple of less than 7. If we compare that to Verizon, we can see that AT&T is slightly undervalued compared to Verizon. I believe it isn't significantly undervalued, but the goal here is to not overpay for the stock. Okay, we have looked at 3 reasons why AT&T may be a good investment in the current environment. The goal here is not to make money, but not to lose money, which I believe is the first 2 rules of Warren Buffett. We saw that AT&T has low but predictable growth rate of around 2%. It has a high dividend yield of 5.3%. They also have a payout ratio of close to 50%, which shows that the dividend seems to be stable. So in the event if the market goes lower, we still get our dividend. I also believe that AT&T is slightly undervalued, so we do not overpay for the stock. Also, AT&T recently made a spin-off of Warner Media. Here's the video about the new company. If you are not subscribed to the channel, you can do this by pressing the subscribe button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.